Imagine this, you buy a home in Toronto or Vancouver 20 years ago for $300,000. Today, the same home is worth over $1.2 million. Sounds great, right? You must have made a fortune. But here's the problem. While your house price quadrupled, so did the cost of living, property taxes, and even basic necessities. That $1.2 million today doesn't buy what it did 20 years ago. In reality, your wealth didn't grow as much as you think. It was just keeping up with the inflation. This isn't just about real estate. It's the same story with your salary, savings, even your stock market investments as well. Inflation is a silent thief that erodes your purchasing power over time. So today, let's talk about how you can fight back and protect your wealth in Canada before it's too late. So let's go. Let's say you invested $1,000 in large cap US stocks in 1974. By 2024, it would have grown to $341,000 in nominal terms. But after inflation, it's worth only $56,000 in today's dollars. That's an 84% reduction in purchasing power. Now let's bring this home to Canada. If you kept $100,000 in cash 20 years ago, it should still be $100,000 today, right? Well, not really. The real value of that cash has shrunk to about $50,000 in purchasing power because of inflation. Half your wealth disappeared simply because you didn't invest it. This is why relying only on savings accounts, pensions, or fixed income investments won't cut it. If you're not actively protecting your money, inflation will eat away at it like termites in a wooden house. But why is inflation getting worse? And what can you do about it? There are three major reasons inflation is hitting Canadians harder than ever. Number one, government debt and money printing. Canada's national debt is over $1.2 trillion. And how do they deal with it? Print more money and borrow even more. More money in circulation means your dollars lose value over time. Number two, trade wars and US tariffs. Rising tensions with global trade partners, tariffs from the US, and disruptions in supply chains means higher cost for imported goods. Since Canada relies heavily on imports, that cost gets passed on to you, the consumer. Number three, political and economic instability. Higher taxes and weaker Canadian dollar and an over-reliance on real estate mean our economy is vulnerable. If things go south, guess what? The government's only tool will be more money printing, leading to, you guessed it, more inflation. So how do you protect yourself? Let's talk about the best inflation-proof investments you can make today. If you want to beat inflation and protect your purchasing power, you need to invest in assets that increase in value over time, not just in nominal terms, but in real purchasing power. Here's what you should consider. Number one, Bitcoin, the hardest money ever created. Let's get this out of the way. Bitcoin is the ultimate hedge against inflation. Unlike government currencies, Bitcoin has a fixed supply of 21 million coins. That's it. While governments print money endlessly, Bitcoin's supply is mathematically limited, making it scarce like digital gold. Over the last decade, Bitcoin has outperformed pretty much every asset class in the world, including stocks, real estate, and even gold. If you're not at least learning about Bitcoin, you're missing out on one of the greatest wealth preservation tools of our lifetime. Number two, gold has been a store of value for centuries. And during the time of crisis, it has consistently retained its purchasing power. Now, a special emphasis on retaining the purchasing power. While the central banks manipulate fiat currencies, gold remains a globally recognized real asset that cannot be printed into oblivion. Number three, real estate. But be smart. Real estate in Canada has historically outpaced inflation, but not all markets are equal, and especially with regards to bureaucracies and all those rules about tenant protection, Canadian real estate doesn't really give me any attraction anymore. So I'm looking outside Canada, places like Dubai, Singapore, Malaysia, Oman, where they have more landlord-friendly environment and have less taxes to grow your wealth. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because We have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. Number 4, stocks and dividend investments. Not all stocks are equal. Focus on companies that produce essential goods and services. Dividend-paying stocks help offset inflation by providing consistent cash flow. Consider sectors like energy, utilities, consumer staples, which tend to hold value even in inflationary times. Geographic diversification. So Canada is overtaxing its citizens and government policies are not favorable for wealth preservation. So countries like UAE, especially in Dubai, Singapore, and Malaysia and Switzerland offer better tax environment and stronger currencies. If you are serious about protecting your wealth, consider moving part of your money outside of Canada into stronger financial jurisdictions. You don't have to figure this out alone. One of the best ways to navigate uncertain times is by surrounding yourself with like-minded people. People who are thinking ahead, taking action, and securing their financial future. That's why I've created a WhatsApp community where we discuss career growth, investment strategies, real estate and wealth building, and personal development. So if you're interested in joining this community, there is a link in the description or the QR code here on the screen. Join us if you want, and let's grow together. You don't have to be the victim of inflation, but if you don't take action now, you will be. That's why I created a course on macro fundamentals to teach you exactly how to protect your wealth and navigate this broken financial system. Or you can reach out to me to have a one-on-one consulting call so we can find a better way out. Because here's the reality. The inflation isn't slowing down. The only question is, are you prepared? Anyway, if you like this video, give me a thumbs up, subscribe, and let me know what you think about that in the comment section, and I'll see you in my next video. Take care.